down the morning action on D Street and bring to you the top stocks in the spotlight today. But as always, let's begin with how the global markets ended on Friday and how they are doing this morning. Now, Wall Street closed flat on Friday. S&P 500 ended 0.13% higher, whereas Nasdaq was up 0.08%. Dow Jones, on the other hand, closed flat. The US markets are now on a 3-week winning run, their first 3-week winning run since July this year. European markets also reversed their previous session's losses. The S&P, the Pan-European Stoxx 600 index closed around 1% higher, with all the major sectors and bourses ending Friday's session on a positive note. Meanwhile, Asian markets have kick-started the week on a positive note. Hang Seng, as we speak, is up over 1.5%. South Korea's Kospi is up over 0.5%. And Japanese shares, which by the way have hit a fresh 33-year high, have corrected and are down marginally. And this is as of 9:45 a.m. this morning. Other major cues are also looking fairly positive for the markets. Dollar index has slipped below the 104 mark and is now at a 2-month low. The US 10-year Treasury yields, which briefly hit their lowest level since September 28th, have bounced back and are currently at around 4.45% or so. Crude prices, however, has picked up by about $4 since we last spoke. That is on Friday. Brent crude, as we speak, sits above the $81 a barrel mark. On Friday, when we left off, we were at $77 sort of a levels. So that is a negative. Otherwise, the overall setup for the markets is looking constructive. Back home, the Indian markets opened this Monday morning with the first tick for Nifty coming in at 19,731 mark. Now, since the morning losses, we have slipped by about 20-30 points or so. Nifty 50 as of 9:30 a.m. this morning was down 0.06%, just below the 19,720 mark. Sensex, on the other hand, was below the 65,700 mark. The Midcap 100, which by the way opened at a record high, is sitting 0.33% higher at 41,948 sort of levels. The small cap index, which also scaled a new lifetime high today, was 0.31% higher at 13,925 mark, and this is as of 9:30 a.m. this morning. Volatility has also picked up. India VIX is up 3.76% above the 12 sort of levels. But with that, let's welcome Avni Bhatt, Senior Vice President at JM Financial. Good morning, ma'am. Thank you for joining us here on First Take.
Good morning, Suresh, and a very good morning to all the viewers as well.
Now, ma'am, in the last 2-3 sessions, market actually has been on a good run. 800-900 points we have rallied since that October 26th low. But in the last couple of sessions, at least, we have seen some bit of resistance build around the 19,800 mark. Is that a level we need to closely track? What are the levels, broadly speaking, you are tracking for the Nifty?
So Suresh, talking about Nifty, 19,850 is the level, is the important resistance level from where we have seen a 1,000-point correction twice earlier. And in the last 1 week, the rally that we saw, it did cross 850 during intraday trades, but it could not sustain above that level. So a close above 19,850 is very, very important for the market to sustainably keep moving higher. Otherwise, 850 is one of the key resistance areas where we, repeatedly keep seeing some selling pressure. But the good part is that the support level is also well placed at around 19,500 for this coming weekly expiry, as well as for the month. So it's now again got back into the range. In case if we close above 19,850, we are going to see an up move up to around 20,000 and 2,200 on the upside, whereas support is well placed at 19,500.
All right, that's a view on Nifty, ma'am. Nifty Bank came under a significant pressure on Friday. Of course, there was some negative news, whereas RBI has tightened norms for unsecured lending. But the index overall was also facing some resistance at higher levels, where at least on Wednesday and Thursday, we closed around 200-250 points shy of the day's high. What are the levels you are tracking on Bank Nifty, and can we rescale that 44,000 mark? Because I think most of the sentimental impact of that RBI's regulation has pretty much priced in, isn't it?
Yeah, so Suresh, Bank Nifty has been a spoil sport in last, I wouldn't say last 1 week, but last 1.5 to 2 months, and it has been the Bank Nifty index which is holding back Nifty too. So on Bank Nifty, the support level is at 43,200, but the resistance levels at 44,000 is pretty strong because there has been a lot of call writing that has emerged in last 2 days on Thursday and Friday at 44,000 level. So a close above 44,000 is important for Bank Nifty to scale up higher to around 44,400. On the downside, support is placed at 43,200, which is again a very important support level. In case if we break the support level, then we are heading back towards 42,800. However, my view is that for the current scenario, I think 43,200 support level will hold, whereas 44,000 will be the resistance that Bank Nifty needs to scale.
Now, ma'am, a couple of stocks also I want to touch on in the financials and the banking space. First up is SBI Cards, declined by about 5% on Friday's trade. However, this morning it's up about 1% or so. Overall, I mean, in the last 6-7 months, we have seen quite a bit of correction set in for the stock. It's down about 17-18%. Year to date also it's negative. How is this stock looking on the price charts? Is it a good time to buy, considering we have seen significant amount of correction taking place over the course of the year?
So SBI Cards has been moving in a downward trending channel, and until and unless we see a breakout of this channel, we are not going to see any big up move on the upside. There will be a bit of pullback rally that we may see, but it gets sold into. And even for the short-term trading, if we see on the weekly charts, there has been a bearish engulfing pattern. And for this, the target on the downside comes to somewhere around 710. So just for small gains, small trading ideas, a very short-term, ultra short-term trading perspective, we can buy the stock at only if it comes somewhere around 710. And for a very small target of around 750. Keeping a stop loss of 700. But otherwise, for the long term, for as an investment purpose, I don't think we are still out of the woods, so we can avoid this stock.
Not out of the woods for SBI Cards. But ma'am, another stock, among the financials was Bajaj Finance. Has been under fair bit of pressure. On Friday, we saw a correction of about 2% or so. In the last month, as I can see, it's down by about 8.5% or so. But, given, the kind of returns Bajaj Finance has given over the last 5 years, I think it's up almost 200% in that time frame. Is this the dip that investors can perhaps add positions or build on for Bajaj Finance?
So Bajaj Finance falls into those category of stocks which when they move up by 8 to 10% up or down either ways. So we see a continuous movement of 8 to 10% whenever the trend begins. So as of now, it's in under selling pressure. On the downside, the supports as per the options data, it is at 7,000. But technically, there's a good support level at 7,100. And it is definitely a very good stock as far as a portfolio consideration is there. So from an investment purpose, we can add the stock in our portfolios. From a trading perspective, one should wait for at least 7,100 level to re-enter and for short-term trading purpose. So it's definitely a good stock. Yes, we have seen some correction, but that correction will find support at around 7,000.
All right, that's the view on Bajaj Finance. Another stock I wanted to pick your brains on was Nykaa. FSN e-commerce, turned positive for 2023 for the first time, on Friday's trade. And I mean, the kind of returns that we have seen from Nykaa in the past 6-7 months, I think in the last 1 month alone, it's up about 22%. How is that stock looking on the price chart, ma'am?
Suresh, when I look at the charts for Nykaa, I think the gains have come in last 1 month only. Since January 23, the stock has been consolidating in the range of 120 to 155. And in last 1 month, it has given a breakout above that level. and now we are seeing the up move. So this breakout target comes somewhere close to 215. So I think it's a very good stock to enter into, because the breakout is already done. If at all there is any dip, any kind of retracement post the breakout, 155 will be the support level which will hold on to. So if you get the stock at any dip somewhere around 165 to 170, it's a good entry level. Even at current price, one can enter the stock, one can go long on the stock for a target of 215. Time frame would be around 3 to 4 months.
All right. Coming back to the indices, I think the Midcap 100, Nifty Midcap 100 opened at a lifetime high today. You know, on Friday's traded close above 41,800 for the first time. It has been on a 12-day winning run, ma'am, and you know, I think between the two, small cap has been a clear outperformer, but mid caps, where we were seeing some moderation take place along with the large caps, is you know, the investors are once again taking interest in the mid cap index. What are the levels on the upside that you know you'll be tracking for the Nifty mid cap 100?
Yes, so mid-cap index, why it is looking so interesting is because, as you said, it has consolidated quite a lot. It saw the cool off that is required for a sustainable up move, and now it is again on the upward trajectory. So I think on the upside, we should be very soon looking at levels of around 44,000 on mid-cap select 100. And on the downside, the support level is placed at around 41,000. So yeah, that's also pretty low, around 900 points lower. But mid caps have the tendency to move, to give big moves on either side. So, but yes, it's the view is definitely positive. We should be seeing 44,000 level in a very short time.
The view is positive for the Nifty Midcap 100. Ma'am, but before we let you go, what are the, you know, 3 or 4 or 5 short-term trading ideas that you can, you know, give for our viewers?
So, Suresh, I would first start with escorts. We had discussed this last week also. It's an expensive stock, but it's going to do still better. And so it's a hold. We had, I think, initiated somewhere around 3140. It's currently at 3210. So you can keep holding the stock for a target of 3400. And now the trailing stop loss should be kept at 3140. The other stock that has come on my radar is Ashok Leyland. It is under pressure today, but only if it crosses 174 level again. The build-up is good. 175 straddle is where the highest open interest is, and the overall premium for that straddle is around 5 to 6 rupees, which gives us a support base at 169 to 170 level. So we can buy the stock only once it crosses 174 level for a target of 186 and a stop loss of 168. The third stock that I would like to recommend is Havells. Havells has seen a very good build up. 1280 is somewhere we can enter the stock, and for a target of 1385, keeping a stop loss of 1240. So 1275 to 1280 is a good range, good entry range that we can enter longs for. And yes, the next stock is Ultratech Cement. Ultratech Cement is on the verge of a new breakout, and 8790 to 8800 is where we can enter the stock. Currently, it has come down a bit. Today, it is under a bit of selling pressure. But once it crosses 8790 to 8800 level, we can enter the stock for a target of 9000, keeping a stop loss of 8670. And lastly, the IT sector itself is doing very good. It has come out of that consolidation, given a breakout, and it's on a up move. And one of the IT stocks that has not moved in last 2-3 days, not moved as much, is LTTS, that is L&T Technology Services. So we can enter this stock in the range of 4450 for a target of 4630 and keeping a stop loss of 4360.
All right, those are the 5 trading ideas for the short term from Avni Bhatt. Thank you, ma'am. Always a pleasure speaking to you. Thank you.
Thank you, Suresh.
But moving on, let's look at how the markets are holding up. And if we can pull on the numbers for 10 a.m., I think Nifty is holding above the 19,700 sort of levels. We have given up, another 10-15 points or so from 945. But Nifty 50 as we speak is down 0.11% at 19,711 mark. Sensex on the other hand is down 0.17% at 65,684 mark. Nifty Midcap 100 is holding on to the morning gains. As of 10 a.m. this morning, it was up 0.27% at 41,932 sort of levels. Nifty small cap on the other hand was up 0.38% at 13,933 mark. The volatility has eased by about 50 basis points or so in the last half an hour. India VIX as of 10 a.m. was up 2.81% at 12.16 levels. Now let's also look at some of the sectors, how they are doing this morning. Now Nifty, all right, I'm made to believe Gaurang Shah, Senior Vice President at Geojit Financial Services, has also joined us on the show. Sir, good morning. Always a pleasure speaking to you here on News9, sir.
Thank you so much. Thank you.
Now, sir, in the last 3 weeks, we are in a 3-week winning streak. In the last 3 weeks, Nifty has scaled up by about 900 points or so. For the for the short term, 2 to 3 months, what's your directional view of the overall markets, and what are some of the key factors that you will be tracking till the end of 2023?
Thank you, and morning to all of you also. So it's a very tricky question, to be very honest. We'll have a couple of events on the domestic front, which is going. Events on the domestic front, which is going to be very, very important. I'm talking about the 5 state elections which are underway, and the outcome of that will be known by first week of December this 2023. And next year we have a big election. So from now up until next 3 to 6 months, if you ask me, it's going to be extremely challenging in terms of volatility, Suyash. But at the same time, there is going to be plenty of opportunity, stock specific. Volatility, I'm referring to the index, that is Sensex and Nifty. Opportunities, I'm referring in terms of sector and stock specific ideas and the news flows that are following. So there's going to be a little bit of, tricky and choppy kind of view on the markets for next 3 to 6 months. Post the election done and dusted and the outcome known, our sense is that we are going to see a very decent rally upwards. We might outperform the emerging market peers and possibly turn out to be the best performing market. And of course, on the earnings front, whatever we've seen done and dusted in the second quarter, third and fourth is likely to be a shade better and possibly much better in terms of performance in the next financial year. It's going to be plenty of opportunity in terms of stock picking, investment ideas from a long-term point of view.
Now, sir, talking about, the focus being on sectors and stocks, one of the sectors that, perhaps there was some negative bit of news flow in Friday's session was the banking and the financial pack, where RBI has, made the norm stricter for unsecured lending. What kind of, overall impact on the profitability of banks will it be? Because from what I understand, they'll have to, increase their provisioning.
So yes, to be very honest, I've heard into the comments from some of the top managements of banks and NBFCs over the weekend from Friday since we got to know about it. And let me tell you this very frankly, Suresh. I think it was need of the hour. The kind of whip that has been cracked by the RBI on unsecured loans. I don't know how many calls or SMSs or emails you must be getting, but I have got plenty of such, unwarranted, unpleasant calls, whether you want a loan or whether you have a car on which you want a loan, whether you want an education loan, you want a, extended credit limits on your credit card. To that extent, let me go on record. I got a message on my personal phone saying that a card has been issued to you, which did not, that cell number did not belong to me. the name was of some other person, and the lethargic approach of that bank is, and let me tell you, it is one of the leading private sector banks, that they have not even bothered to verify, even after me telling them that, listen, I have not applied for any credit card and I've got this message and you have issued saying that your application is under process, but the information that gentleman has given to you is wrong. It is my cell phone number and I have not approached. So you can understand the severity and since kind of approach that the RBI is taking is to possibly control. A lot of things were going out of hand, and unfortunate part is that if it goes out of hand, then it has a domino reaction, chain reaction, which leads to a very complex situation, and to get hands and control on that situation becomes very difficult. 2020, Suyash, if I'm not mistaken, 125% was there in terms of risk cover. It was brought down to 100 now, because, and RBI had also warned the banks and NBFCs way back that, listen, if you don't get your acts right, we'll have to act on this. And they've done that. And I'm glad that this action is taken, because it will possibly protect the unforeseen, unpleasant situation which it would have created. Like I gave you my example. So I think it is good. It will bring in discipline and it will bring in clarity.
And what about the question about the profitability? Some of these, banks have a high retail exposure. Do you think their, perhaps profitability would be significantly impacted?
I don't think so, to be very honest. And to give you a clear-cut view on the banking and NBFC post this step by the RBI, we remain optimistic on strong banks, strong NBFCs, whether it is private banks, whether it is public sector banks. We are quite optimistic. And credit growth is not only going to come from the unsecured category, but also from the secured corporate side I'm talking about. And you will have opportunity. I mean, margins may get impacted for those who have over leveraged, Suyash, and not bothered about risk profiling your customer. Whether the customer, after giving the loan, has the ability and strength to give you your principal and interest in installments or EMI form. So I believe it's an opportunity from a long-term point of view. We've seen this correction on fallback of this news flow, but long-term, strong NBFCs, banks, I don't think their margins would get impacted that seriously that will call for downgrade or a re-rating downwards.
So, but on Friday, we saw across the board sort of correction, whereas Axis Bank, stocks like Axis Bank corrected by about 3%. HDFC Bank also came under a fair bit of pressure. For those stocks, which at least from hearing from experts, the valuations are looking attractive. Is this an opportunity to perhaps enter these stocks?
So, large cap private sector banks, let's talk in terms of earnings and performance over the last 5 years or maybe more. And you have witnessed, I have witnessed that public sector banks have outperformed, private sector banks have outperformed public sector banks. Now, within this time, post the changes, mergers, the strength and the health of the public sector banks have improved. And hence, we have seen the kind of performance. To answer your question, as far as Axis or HDFC or the ICICI banks of the world is concerned, they remain on our fundamental coverage on the positive side. And our sense is that this is not the only time that you should buy. I think overall, even if you get a correction because of local or global events, geopolitical situation, from a long-term point of view, I would advise to do a SIP in all these big private sector banks from a long-term point of view.
All right, sir. Another sector that I wanted to pick your brains on was the IT pack. I mean, what phenomenal returns we have seen in the last week or so. The Nifty IT on the whole is up around 6% or so. And even the bellwether stocks are performing, like your TCS, like your Infosys, like your Wipro. What's your overall view over there, sir? I mean, is the exuberance even justified, given that, we are hearing only talks of inflation coming down, and Mr. Powell has said that, they will be very vigilant on how inflation thing pans out before even thinking about rate cuts?
I think Jerome Powell, Fed Chair Chief, will have to do what he has to do and possibly take certain steps and initiative which has not been taken in past many decades, because the inflation is at multi-decade high. So they will do what they have to do. We'll do what we have to do. Last week, a phenomenal performance in terms of sectorial index, if you go to see Suyash from Nifty IT, and similarly stock specific. We as a brokerage house, Geojit Financial Services has always been advocating that you cannot ignore IT sector. You have to look at IT sector from 1.5, 2 year plus kind of time horizon, given the headwinds that they are facing, be it budgetary cuts, be it inflation and pressure, be it discretionary spend in the US, lack of large ticket coming through, wage hike, burden on margins, attrition rate, etc., etc. But this is a very interesting sector given the fact that we are going through tremendous amount of changes in terms of IT environment, cyber attacks, various other kind of attacks on corporate sites. Individually, we have been having issues dealing with these kind of situations. And you will need services, platforms, products of IT company to safeguard your IT environment. So we remain optimistic. We were then, we are now, and we will remain positive. But in this sector, if I had to look at the earnings and comparison between large cap and mid cap IT, then I think mid cap IT has been doing quite well compared to large cap IT. Not that we are negative on large cap IT, I'm just talking about a comparison.
Sir, I also want to pick your brains about the US markets and the scenario going on in the global markets as well. I mean, we are also hearing talks about US perhaps slipping into recession by, next financial year, by the second quarter of next financial year. A couple of weeks back, we were, there was all the chatter about a soft landing given how inflation was easing off nicely and, the economic indicators were resilient. Why suddenly talks of US falling into recession, sir?
Correct me if I'm wrong, Suyash. From the beginning of this year, we are hearing this. Not only in US, but also certain parts of Europe. So they will, like I said, like the Fed chair will do what it has to do. Similarly, whether it is a hard landing, soft landing, going into a, having inflation issues, going into a slowdown mode, that only time will tell. And most of the pundits have been proven wrong if you consider the view from the beginning of this year, calendar year 2023. So they have managed to keep their head afloat. Let's hope that they will keep their head afloat. And eventually, then even if this has to happen, Suyash, where will the money flow go to? It will go to emerging markets and economies which are doing better. And I think some of the foreign institutions themselves have said that India is possibly going to clock 6.5% or more GDP growth rate. Given that environment, I think you will see more green bucks coming into the Indian economy in form of FDI and equity investments.
Sir, now we talk about, how you should perhaps tweak your weightage into the emerging market basket, given the geopolitical chips are played. But for a retail investors, how does a small investor gain exposure to, let's say, a Taiwan or a Hong Kong? What's the best way for them, sir?
I am a strong Bharatiya and I believe there are plenty of opportunities, Suyash, in our markets. You don't need to look at Taiwan or Malaysia or Europe or US markets. And let's face it, Suyash, small investors have very limited resources in terms of what they save and what they invest. And I think that our market has got enough opportunity for a small or a medium sized retail investor to keep their appetite full. And unfortunate part is that whenever you invest into any overseas economy or equity market, you are exposed to the risk of that particular geography. And very difficult to control that. So if you're a smaller retail, medium-sized kind of a retail investor, stick to the basics and sticks to the Bharatiya boundaries. I think there are plenty of opportunities.
All right, that's the view from Mr. Gaurang Shah. Sir, always a pleasure speaking to you. Thank you for joining us here on First Take.
Thank you. Thank you so much. Take care. Bye.
But let's also look at how the Indian markets are holding up as of 10:10 a.m., I am made to believe Nifty is still hovering around that 19,700 sort of levels. If you can pull up that graphic, Nifty as of 10:10 was up, was down 0.15% at just above the 19,700 mark, sitting at 19,701 sort of levels, whereas Sensex was down 0.2% at 65,660 mark. The small cap and the mid cap index are holding on to the gains. Nifty mid cap as of 10:10 a.m. was up 0.26%, sitting above the 41,900 levels, whereas the small cap index has pretty much stayed where it was in the opening trade. It's up 0.35% as of 10:10 a.m. above the 13,900 mark. Volatility is once again back above the 3% mark. India VIX as of 10:10 a.m. was up 3.19%, above the 12.2 sort of levels. But with that, we have completely run out of time on this edition of First Take. Keep watching News 9.
Hello everyone, Namaskar, I'm music composer Ricky Cage, 3-time Grammy Award winner and a United Nations Goodwill Ambassador.